Joining me now is Greg Halter. He's the Director of Research at Carnegie Investment Council. Welcome.
Welcome to you, and thanks for having me.
All right, after several months of a market rally that saw the major averages reach new highs, momentum has stalled so far in November. Why do you think that is?
I think we've been up for 7 months in a row, which is quite a good trend. Certainly the market does not go up every day and does not go up forever. So very consistent to have a correction along the way. And, some of these prices have gotten high. There's certainly lots of concern these days about the AI situation. Is it a bubble? Is it not a bubble? Lots of back and forth over that. And even with Nvidia's very good results yesterday, the market initially rose and then pulled back.
Do you think that investor strategies are changing as we approach the end of the year and as they try to lock in the gains?
It's a good question. I don't know about locking in gains, certainly in taxable accounts. I'm not sure why you'd want to do that with 40 days left in the year to pay taxes in April if you are creating a taxable event. I just think it's the normal gyrations of the market. Generally, November, December are strong periods historically, but it doesn't always have to be that way. And again, we've had 7 months in a row of very good moves. We've got folks who contribute to their 401ks making contributions twice a month. A lot of that money finds its way into the stock market. A lot of that money finds its way into the S&P 500. And a lot of that is in the names that we know and love, the large cap names. So there is support there from that standpoint.
All right, and there has been talk of an AI bubble. It's been a hot topic, especially following Nvidia's latest earnings. What are your thoughts on that?
There probably is a bubble in some areas, but this is, I still think, very early innings. We're invested in the names that have plays into the data center construction, companies like Eaton and Vertiv and Argan. These are names that are looking at how all of this equipment is being deployed into the data centers. And there's still plenty of business out there, certainly through 2026. You look at the power side of things, and we don't have enough power in this country. We need to really ramp that up. So those companies and the utilities doing very well that stand to benefit from that. There's been some backlash about utility rates, but we also know that our grid is kind of behind the times, and we need to invest there. So utilities are getting rate increases due to that as well, not just power for AI. So I don't think that's something to blame it on. There's lots going on here. I still think it's very early innings. Things do bubble up at times and then pull back, but I think we have a long way to go to see how this plays out.
Meanwhile, the Bureau of Labor Statistics reported that the U.S. economy added 119,000 jobs in September. What is your take on the state of the job market?
It seems to us that the hoarding of employees, if you want to call it that, coming out of the pandemic may have, I don't know if it's ended, but eased, because you've seen a gradual increase in the number, the unemployment rate at least, over the last few years and into this year. So I think the labor market is something that the Fed is looking at as being somewhat weaker than they would like to see. On the other hand, inflation seems to have round tripped, if you will, this year, where expectations going forward have certainly come down. So, does that leave room for the Fed to do anything in terms of rates at their upcoming meeting? That's the next debate that we'll be talking about.
All right, and this morning, New York Fed President John Williams said he sees room for further adjustments for interest rates. What are your expectations for the Fed? Traders are now pricing in that the confidence jumped to 70%, pricing in a 70% chance of a rate cut. What are your expectations?
It does seem like they've been given some leeway, if you will, to lower rates, given this latest report and the inflation news. They're always looking at the data. We finally got some data to look at, and I wouldn't say it's horrible, but it's not booming either. It's just kind of muddling along. And, some will debate, are we too restrictive or not? I think there is some room to move on rates here, probably 25 basis points in December, and, see what that does. I think it has more help for the Fed and the U.S. government's situation than anything by lowering rates on the interest that we pay on the debt. I'm not sure corporations are going to rush out to borrow because rates are down 25 basis points.
All right. Thank you, Greg Halter, Director of Research at Carnegie Investment Counsel.
Thank you for having me.